Bitcoin has dropped significantly in the last couple of weeks, and I have a pretty major regret about how I've handled the situation that I want to share with you guys, and maybe you'll get some insight from it. Ready? Okay. So here's the deal. A lot of people are very scared right now. They're fearing, they have uncertainty, they have a lot of doubt about where Bitcoin's going. People are worried, is Bitcoin going to go down to $30,000? Is it going to go down lower? I don't know if I can handle that. I'm already down $5,000, $10,000, $25,000, $250,000 on paper on my portfolio, or maybe you even sold and you're actually realized losses are scaring you and freaking you out because you've never lost $250,000 before. Maybe that's the camp you're in. Well, I want to share with you the regret that I'm feeling right now and then tell you what I'm going to do different in the future, and then maybe you can learn something from my experience. The first thing I want to say is that I've been in Bitcoin and cryptocurrency since July 31st, 2017. I've been here for almost 5 years, and I am not perfect. I've done very well for myself in the cryptocurrency markets by the grace of God, but that is not as a result of me making every single decision correctly. That is not a result of me being perfect at every single turn. In fact, it's quite the opposite. I have made so many mistakes while trading Bitcoin and cryptocurrencies that it has given me a plethora of opportunities to learn how to do just that better. Profit in cryptocurrencies. So I have lost a lot of money. I've made bad trades and lost thousands of dollars. I've seen my portfolio go down 6 figures and more. I have watched that happen. And the mistakes that I have made, I hope, can teach you something. So the mistake that I have made on this dip is that I didn't have enough cash on the side. You know, billionaires are made during recessions. You've probably heard that before. I've said it before, but you might be wondering, okay, well, how does that happen? How are billionaires made during recessions? Wouldn't it be easier to make your billions when the market is doing very well, and it's easier to get people to buy your knickknacks on your Shopify store? Well, yeah, it in theory is, but that's how you make millionaires in bull markets. But the way you make billionaires are actually in bear markets. And the reason is the best buying opportunities show up down here. So here's my biggest regret of this entire drop. I was already so exposed to Bitcoin and cryptocurrency. About 70% of my entire liquid capital, as far as my net worth is concerned, is in cryptocurrency. I was already so exposed to crypto that it would be unwise for me to put any more in. In essence, I didn't take profits at the top, or I didn't invest in a cash portfolio so that I would have enough on the side to buy the dip when Bitcoin and Cardano and Ethereum are down at these juicy price levels. So now I just kind of have to look at them and say, okay, that's a beautiful price. I would love to go buy a ton of Cardano. I would love to go buy some, Polkadot, or I would love to go buy some Bitcoin or Ethereum. And it really isn't wise for me to do that because I didn't take any profits and I didn't invest in a cash portfolio. So here are the things that I'm going to do differently, and this might give you some perspective. Number one, I'm going to actually be stopping my long-term hodling strategy at least a little bit. What I'm going to do is I'm going to split my hodl portfolio into a hodl portfolio and then into a, not even a swing trade portfolio, but just kind of an investment portfolio that I'm willing to buy the top, buy the bottoms and sell the tops with. So I'm probably going to do that with an 80-20 split. So about 80% of my portfolio I'm going to leave, and I'm not going to touch it. I'm going to hodl it forever, or not literally forever, but indefinitely, maybe I should say. And then probably about the other 20% I will allow myself to buy and sell the tops. And what that'll do is that it'll allow me to sell some of my Bitcoin and Ethereum and Cardano at the next peak, because I do think we're going to have another major high, maybe an all-time high this year, hopefully an all-time high this year, and then I'll sell some of that into a stable coin or put it into some kind of yield farming and some staking stable coins or whatnot, hold on to it, and then have some cash on the side for the dip. And then whenever we dip like this again, I'm going to buy more. My strategy for the last 4.5 years, just so you know, has been every time there's a dip, put my cash in, because I have ways of generating cash because I run a business and everything. At this point though, I'm like, you know what? I've already got so much in Bitcoin that I don't really want to put any more of my net worth in Bitcoin because I'm already a little over leveraged. So I'm not at the point, I want to be clear, I am nowhere near the point that I can't pay my bills. I am nowhere near the point where I've invested more than I can afford to lose. I can still afford to lose every single penny of my cryptocurrency portfolio, and I would be fine. I'm just not comfortable going any further in. And that was a mistake of mine, and hopefully you'll be able to learn from it. So as I said, what I'm going to do is I'm going to make sure that I have a cash portfolio on the side that's maybe 10 to 20% of my entire cryptocurrency portfolio as far as US dollar valuation is concerned. And then whenever there's a dip, I'll be able to buy it. So The lesson here, and the reason I'm telling you this, is because I want to give you a lesson in portfolio management. There are a lot of different ways that you can manage your portfolio that will help you to become successful. One of them is splitting your investment and your trading portfolio in two. Number one, your trading portfolio is something that you will use to buy and sell over the short term, likely within a month of each other. You might buy and sell within 3 minutes, or within 15 minutes, or within 4 hours and 27 minutes, or you might buy and hold for a week and then sell. You might short for a week and a half and then cover that. So the trading portfolio is for short-term tradings. The investment portfolio is exactly what I've always said, which is buying and holding forever. But the change that I'm making to my philosophy is that it's not a bad idea to split up that investment portfolio into indefinite investment, and then I'll call it shorter term investment, but I'd still say 1 year plus, so that you're not being hit by short-term capital gains. So hold on to Bitcoin for 14 months, 18 months, 24 months, sell some tops and then buy some dips. And then the final portfolio that I have said for a while that you want to maintain is a cash portfolio. It's very important that you have a cash portfolio so that you're able to buy those dips when they come. As I said, the billionaires get made during bear markets, and you know how that happens? They buy real estate. They buy cheap stocks. They buy up companies that were going bankrupt that they have the expertise to turn around. They buy the deals. That's how that happens. That's how eBay bought PayPal. That's how Yahoo got sold. That's how a lot of these major companies changed hands. That's how Microsoft bought Skype, and Skype was on a low valuation a long time ago. That's how these companies do this. So I encourage you, do what I'm going to be doing moving forward, and make sure that you always have a cash portfolio on the side to ensure that you're able to take best advantage of those dips and those opportunities when they come. Tell me in the comment section down below if this has been helpful, and tell me if you would like to see some more videos on portfolio management and how to best capitalize on some of the biggest opportunities in the Bitcoin and cryptocurrency space. If you haven't already subscribed to the channel, subscribe to the channel, smash that like button, and I will see you tomorrow on Coffee and Crypto at 9:30 Eastern. Peace.